Alright traders, I'm back again with another video, and today we're going to go over a few trading opportunities, look at some trades that I was in and trades that I'm looking to get back into. I got out of those trades. I'll show you the reason why, show you what happened on those trades. But we want to do some math right now. We're going to do some math to get our money management techniques down. So we want to look at a couple things. Now, first thing, my last 7 trades, I lost 4 of my last 7 trades. So basically, let's say we're going to do this for just to make things easy. Let's say our account was $500 and we had each trade, the pip value would be $1. So let's say each pip is worth $1. So we're going to go by pip value, and our account is $500. So we're going to say my last 7 trades I lost 4 of those 7 trades. So let's go over the losses. So the trade minus 40 on one of them, and then minus 20 on another trade, and then minus 40, and then minus 15. So minus 115 out of my $500 account. So now I'm down to $385 in my account. Okay, so you guys figure, yep, he's losing his trade, he's losing his account. His account should be gone, and maybe you figure I lost that much, maybe 14 more trades, right? I got about 14 more trades left. So let's look at that. And basically, this is saying a $500 account. You would never risk this kind of money with a $500 account, but I'm doing this to make it easy. And I'll tell you how much you're going to basically risk on each trade. I risk no more than 3% of my whole total account. So if my stop loss is going to be $100, I know that it's going to be 100 pips, which would be, say it's my value is $100 off of the dollar pip. Then no, I don't want to. If that's going to be more than 3% of my account, no, you don't want to do that. Okay, but then say you can cut your, in order to make that trade work for you, you could cut your lots in half. So if you're trading 10 lots on that, then maybe you take it to 5 lots. Okay, and then if 5 doesn't do it for you, then maybe you take it down to 2. All right, or else you don't get into that trade. So those are things that you're going to have to do to get your money management right, to get your risk and reward ratio right. You can't risk more than, you definitely don't want to risk any more than 3% of your account. The most I risk is 3% of my account, my total account. Okay, so now let's say we lost that 115 on that $500 account, so now we're down to 385. All right, so let's clear that. But then on our winning trades, we came back and we made 73 pips, and then we made 100 pips, and then we made 30 pips. So we had 203 pips, and then we minus the 115 that we had. That gives us 88 pips, right? So basically, I'm up now. My account is $588. So I'm up $88 on my last 7 trades when I lost 4 of them. So do you understand that? That's how you do your money management. Now my account is not $500. My account, I don't trade. My lot size has changed depending on enough to make my, like I said, to change my risk to reward ratio. Sometimes it'll be less lots or more lots, and it also depends on what I feel about the trade. If I don't feel really confident on a trade, I'm not going to risk a lot, and I'm not going to use you know I'm not going to put a big 100 lots on there or something like that. You want to be smarter than that. All right, so there you see I made $88 on my account, on a $500 account, and made it up after losing 4 of 7 trades. Okay, but let's go to the charts. We're going to go right here, starting with the dollar Swiss franc. And on the dollar Swiss franc right here, we're looking at this was a trade that I wanted to get into, but I didn't get into. because I was in another trade. Now the thing about this trade, let's go to the daily first. All right, taking this trade would have made me look at breaking this level, because here's where I would have gotten into the trade where the green line is, and I'm only going to look at this level because this level is where there's some support. So maybe the trade only goes to that level, bounces and goes up. So it wouldn't have been a good trade for me. I didn't want to risk the small amount to make the. I didn't want to risk the amount to make that small of a trade. Well, I want to get to a better trade. So what I'm looking for is to break this level, because if we break this level, here's the next level we're shooting for down here. All right, so we break this fractal support level and we shoot for this next level, this lower level down here. And that would be a better trade. Now, if you did get into that trade, it would still be a good trade, because basically you hold on, you keep your stop loss tight, you would be a little bit above the red line here, and you're shooting here. So that's probably a little more than a 1-to-1 ratio right here. And then you're in the trade, and if it breaks this level, now you have this target to shoot for. You could bring your stop loss from here down to here, and now you're guaranteed this level right here, and now you're shooting for that. But I didn't get into that trade. I'll show you why. Now back to the 4-hour time frame. So here's where we would have looked to get into our trade. Now what we can also look for is a few things here just to get back into the trade. If you weren't in this trade here, you can look for price to come here, maybe bounce on this level, maybe makes a fractal level here, bounces, retraces. If it retraces up to this level, and bounces on that level, you're going to take that bounce off of that level, off of that resistance level. It could even be this level here. This is where the fractal levels are right here. And if you get that, then you could take the bounce for a short trade and keep your stop loss tight. Or else you can wait for price to come back and break that fractal level that it will make if it develops a fractal level here. And that's anticipating what the market may do. All right, so we know this is going to be a little bit of a support level. We want to see what the market does there. And if the market does what we think, maybe bounces, retraces a little, makes a fractal level at that support level, and then breaks the level, we could take it, or we could take the retracement level. So there's a few things you could do on a trade, but you saw the target that we're going to shoot for. All right, so let's go to the dollar yen. The dollar yen is a trade that I was in, and I'm going to show you all about that trade. Let's remove these. All right, I got 73 pips right here. Let's go to the daily time frame. On the daily time frame, this looks really nice. The setup looks really good. You break this level, and this looks like our target right here. There's nothing to inhibit us here. There's no cloud. There's no support and resistance right here. No resistance down here. No support down here, rather. So there's nothing here. The next support level is right here. So that's what we're going to be looking at. We want to see price get to here, and there's a good possibility that it will. All right, because the market's looking for a place to go to, and this is the next logical place. Now the market may retreat, may stop here, and then go the opposite way. The market's going to do what it's going to do, but we can plan to see what we think the market may do based off of our technical analysis, and our analysis is based off of support levels, basic support levels that the market moves to and fro, to and fro. All right, so we broke this fractal level, and this is where the trade enters. You enter the trade right here, and you should be in this trade down to this level. Now I got out of the trade on the 4-hour time frame. That's the daily right here. Let's go to the 4-hour. Let me show you why I got out of the 4-hour time frame trade. And I got out of the trade anticipating a pullback, and let me show you why. I've been preaching all the time about the 1-to-1 ratio, the market ratio, 1-to-1. The market knows, has a good memory and knows what it's done before. So this move started here, right? It started there, and it came down to here. Then it retraced up to here. All right. And let's move this up to the point. All right, right, that's where it started. Went down to this level, then retraced it to this level, and smack dab 100 on the nose. This is a 100% move right here. All right, so this move is the same exact size. This move from here to here. So this would be A, B, and then this C is the same. This C to D right here. So from here is C to D. All right, so you guys understand that? This is going to be point A to point B, point C to point D. So point C to point D is the exact same size as point A and B. So that's the 1-to-1 ratio. The market hit that 100% on the nose. Looks like it's trying to retrace here. So I'm saying this is going to be a level of support here maybe. Maybe the market retraces a little bit. Now we're going to see what the market does. If it retraces and then breaks that level, if it retraces, makes that fractal level down here and breaks it, you could get back into the trade. Now we're also getting far away from the Kijinsen, okay? So that would be another thing that we want to remember. We're about on a 4-hour time frame. You don't want to really get into a trade after about 200 pips. 200 pips max is where you want to look at, and we're at like 177. All right, so we're 177 pips away from the Kijinsen. We don't want to be that far away from the Kijinsen. The market may retrace. It may want to retrace and try to get back in equilibrium, and then we can get into the trade again. We can get into the trade on the break of the fractal level if this is going to be the fractal level, and we'll see after the next few candles develop. And if the market breaks this level without retracing really, then we probably won't get into the trade because our setup won't be the way that we want it to be. Even though we know where the market may go, we're anticipating where the market may go to the next level. We don't want to be set up into a spot where we don't have our stop loss at a good support or resistance level. So basically we want to see this retrace from this level. If it retraces, we love to see it come all the way back up to here, come up to this level, in this level area somewhere, this level where we got into the trade, or this level where these fractal support and resistance levels are. So this will be a fractal resistance point. If this market comes all the way up to this red level we're here, which would be 97.64, we definitely will get into the market here on the bounce and just have our stop loss a little bit above that level. All right, and then you see this 97.48 right here. This is where I got into the trade. So if the market retraces back to these levels, we definitely want to get in on the bounce short, okay? And then we let the market go. We'll break this level. If you don't get in on the bounce on the retracement level, now if the market retraces and you don't get in, you're going to wait for the market to come down and break the fractal level that it develops. And this will develop a fractal level if no candle goes lower than this, the next two candles. That will develop a fractal level. And then the market, even if the market just retraces this far, right to this level, and then comes down and breaks this fractal level, that's where we're in the trade. And then we'll have our stop loss a little bit above this level right here. So we probably put it above one of these candles. Would be above this level though. A lot of times when the market goes, it goes, you know, you could put your stop loss 10 pips, all right, but you want to give the market logical room to move, you know. And then we will shoot for that target down here that I'm telling you about right here. This will be our target where we look for the market to maybe bounce off of this level and then go back upwards or whatever. We'll see what it does when it gets there. But that's the level we're going to be shooting for. So we're going to look to get into that trade. This is a nice setup here. But if I'm wrong, then the market's going to go back up and it's going to go through. And it may range for a long while, then break up and go back to the upside. But right now, the trade setup is for this to go retrace a little bit. Retrace maybe up into this level. Look at these levels for your entry. Or then break this level. Break this level for your entry on a fractal break. All right, that's the dollar yen. We're going to go to the pound dollar. This was a trade I was in. That's why I didn't take that other trade that I told you about for the dollar Swiss franc. This is the pound yen, the pound dollar on a 4-hour time frame right here. We'll go to the daily for a minute. Look at that daily time frame. And you can see on the daily time frame here, we got a all bullish. Everything's bullish. So we're looking to go long here. We're looking to get into this trade again. But here's the target that we're really shooting for right here. You know, this will be the double top right here on the daily time frame. We broke this fractal level. This is where we look to break, and this is where we got into the trade. Now I was asleep when this trade triggered. I already had the entry order, and this entry order in was in for a few days, and I just let it go. And finally, what I did, I had to, once this level was developed, I put a um, entry order in, and you could see where my stop loss was. This is where it was right here with the red. This is where I had it because we could see where the market was ranging in this level. This was the lowest level at that point. Well, I had an entry order in right here, and then price, once I didn't have it in until after this area here, and I could see where we never got lower here. So I put the order in after I saw this level holding pretty well. I put it in right here for this fractal break right here, and then I watched it was in for a few days. Price broke, price came down, went lower, and then when I woke up, this long candle had busted through my entry order, and I was up here. Now what I'm looking for again is this market to retrace. Now my retracement levels will be back to this level. Okay, now I'm going to play the bounce on this level. Now if the price comes all the way down, maybe it comes down to the Kijinsen, and then we really like that bounce. But we're looking to go long on this pound dollar here, so we want to see the retracement level. I got out of this trade because we had the 1-to-1 ratio again, and then when I have that 1-to-1 ratio, I'm looking to get out of that trade. And plus I saw the price getting really far from the Kijinsen. So when price gets too far from the Kijinsen, as usual, you know it's going to retrace, and it's like 212 right there. All right, so that's what I say on a 200 on a 4-hour time frame. For price to get 200 pips past the Kijinsen, you don't want to be getting into another trade. You want to wait for price to come back. So we're going to see price retrace maybe, or else maybe price might just consolidate for a while and let the Kijinsen try to catch up a little bit and then go. But the idea situation will be for price to pull back to this level and this area, and then even more ideal would be to pull back to the Kijinsen, bounce off the Kijinsen, and then go. So we're looking at two main players right now. Would be the dollar yen and the pound dollar. So this dollar yen that's set up there, we want to see that, and the pound dollar. Those are the pairs that we're really looking at. Let's go to US CAD. I had a trade order in on here, and then I took it away because I liked the pound dollar and the US dollar better. I mean the dollar yen better. So I had an order in on the dollar CAD, and my entry order was right here, and you can see that. And my stop loss should have been down here, and I had the entry order in right here, and the market moved down, then it made this level, so then we could have moved right here. This is where we should be entering the market, because first we had it here, but then the market moved down, then made this fractal level. We still have our stop loss here, but then here's our fractal level, and then price broke that level. Now look at price trying to come back to this level here, basically coming back to this fractal level, and see it bounce right on that fractal level. And now price may go. Now if this makes a fractal level and breaks that fractal level, you could get into that trade, the US dollar CAD 4-hour time frame. But now we're going to see what price is going to do. Price may be sideways for a little while, may consolidate, or maybe get a better pullback. But you have all bullish signals here. You got a TK crossover, which was in the cloud, which was medium strength signal. You got your price above the cloud, main thing. Chico span is above price and the cloud, and your Kumo twist is bullish. So you got a bullish twist, and you can see that the momentum is very strong right here. It's still pretty strong. It's not showing any momentum dying down, even on your medium term momentum. So the thing is, we break this level, and this is the level that we're shooting to get up to. You could see that. All right, you want to get past this Kumo shadow right here. You get past this shadow. This is going to be a little bit of a support. I mean, a resistance level. But if we break that shadow, definitely looking to get up to this level here. Another double top on the 4-hour time frame. So that's what we're shooting for on the dollar CAD. And if I get a fractal level set here, or I see where the market goes, where we get a bounce, I may get into this trade. I'm looking at these three pairs right here. That's looking very good. Let's go to the pound New Zealand dollar. And this pair moves a lot. This pair was in daily, the ADR on this pair is probably like 200 and something pips. But we had price break out of this triangle here, symmetrical triangle, And this is where we had our entry order in, but we didn't take this trade. Excuse me. We didn't take this trade. We were looking for another trade, and we didn't take this trade, and this trade turned out to be very good. This is a pair that moves a lot. When it moves, on a daily range, you could get about 200 pips or more. And you can see it moved up really well. Then it came way back, retraced at a 50% retracement level of this move. This is the 50% retracement level, and you can tell that because the Kijinsen flattened out, and that's where it came and bounced. But then it spiked way down to this level, and this is one thing that this pair does, is this pound New Zealand dollar. It'll spike on you, and you have to be careful with it. So it spiked way down here, and then now price is sitting right here, and we want to see price get above this level right here. All right, and break this fractal level, or else we're going to see what price does if it makes another fractal level. So until price breaks this level, I'm not in the trade, and I'm not looking for a short trade until price goes below the cloud. So anything long, you want to get above this level right here, which is what, 0.9642. You want to get above that level. But this pair spikes a lot, so you have an entry order set in, it'll spike up on you and then come all the way back down. Suppose you had an entry order in here, price would have came all the way down here on you and then went all the way back up. Alright, so this is the pound New Zealand dollar, looking at that on the 4-hour time frame. And let's go to the euro dollar. Euro dollar, I don't like that much, I don't trade it much, but I'm in a trade right now. It's not really doing much. You can see where my stop loss is right here, and my entry is right here. I entered right there because we broke this level right here, this fractal level right here. Now see, this is the main fractal level. This is where price for a while could not break this level. It pierced all the way through here. This is one of the trades I lost. I had an entry order in here and I was doing well. Price came up, made profit, but then look how far it spiked all the way back down. I kept my order in and it came down, took me out, and I lost like 40 pips on that. And so I'm in this crazy range right here and not seeing what, we want to make sure we get out of this range. We want to see this market move up out of here. So I'm staying tight because we broke this fractal level here, but I want to keep a tight stop loss because I don't like this level, the way this market was moving here. I want to see some definite momentum and movement. All right, so let's go to the daily time frame, look at that, and see on that daily time frame, it looks like the safe thing will be to get past this level here, and then we're only going to be looking to get past here for your target. So that's not a big move. That's not going to be a big moving trade right there. But that's your target right here. That's what you're going to look for. Let's put this horizontal line in here. And how far would that be? So that's 57, and that's what we would be shooting for on that trade right there. Don't really like that euro dollar that much. I don't know why I trade it. I don't even mess with it that much. But I didn't risk much here. 10 pips right here to get 57. That's not bad. So I'm going to keep that 10 pip stop loss to get my 57 target. And if I lose 10 on there, then I lose 10. That's no big deal. What else do we have here? That's going to be it. Another thing. This is what I really wanted to show you. I lost this trade right here, and I probably shouldn't have taken a trade because one of my signals definitely wasn't clear enough. And what signal do you think that would be? For me to take this trade right here, when this candle broke this level right here, so this was the level, I had an entry order in right here, so you would figure this is the candle. How far back will we go? 26 periods back, right? We want to see where what is. Alright, 26 periods back. The Kijinsen, the Chiku span was just sitting on top of the price right here, just above that price realm. But it wasn't above this price realm, but it was above this price realm right here. We needed to clear this level, and you see what it did? Chiku span went up to that level, bounced on that level right here, this level right here. We cleared this level, we cleared this price level, but we need to get it above this level, and we didn't. Chiku span told us don't take that trade, but really it did say take the trade if you think about the past 26 periods. But look at the period here, put a line there and then see if Chico span gets above that, and it didn't get above that. It's hit right on that, and then it dropped down. And that's where I lost out on the trade, and then the market moved down, and then the market did nothing for a while. And this is where we sat for a while. This market is not really tradable, and you can see it's doing nothing for me on this trade here. But I'm gonna risk the 10 pips to try to make 57. Okay, so really that's it, traders. Hope you guys understand what I've been talking about, and these trades are trades that you can find on your own just by doing the things that I'm doing. Using those fractal levels and watching where the market pulls back. 1-to-1 ratios. 1-to-1 ratio does not work all the time. So just remember that. But a lot of times it does work. So that's something that I shoot for and look at. Now we pulled all the way back to that level like this on the yen. So the US dollar yen, we're looking for price to pull back and then make a fractal level and break. That'll be an entry order. The pound dollar, same thing. Hopefully this pulls back. We love to pull back to this level and bounce and go, or else we break that fractal level. All right, traders. So that's what we're looking at, and that's what we'll be looking for the next couple of days, however long the trade takes. Just be patient, traders. Don't be in the market if you don't need to be. Don't force trades. Don't make trades that aren't there. Don't make a trade look like a trade that's not there. Wait for your real signals and just do these things. And if you keep your stop losses tight, like I'm telling you, you'll be profitable. You may not win a big percentage of your trades like you want to, but if you're 50%, you're definitely going to be profitable. And you saw that I wasn't 50% on my last 7 trades, but I still was in a profit. And I can lose another trade and still be profitable, probably 2 trades and break out even. All right, if I had a 40 pip stop loss on 2 trades, I would still be out. I would still be up $8, right? So you figure you don't have to be 100% with your wins, and you don't have to even win 70%. If you win 50%, you'll be doing really well. Just keep your stop losses tight. All right, traders, remember that money management, and that's one of the biggest things. Other than that, I guess that's it. Until next time, God bless. So long.